We are looking at the financial forecast into 2018, and joining us to talk about it is the president of Heritage Capital LLC, Paul Schatz. Paul, thanks so much for being with us this morning.
Thanks for having me.
Paul, right off the bat, finances can be intimidating for a lot of folks. People at home watching this morning, when you are engaging in kind of a new relationship with a client, kind of how does that unfold? What does that look like?
Yeah, well, it's a whole lot less intimidating now that the markets have gone up tens of thousands of points since the bottom in '09. But typically, people come in usually because they're either thinking about retirement or they're already in retirement. So the first step is you really take a very wide-angle lens, look at everything they have, and ask the client, why are you here? It's not, I have nothing to sell them. I tell clients this all the time. If you truly believe stocks are going to go up at the same pace they have been, and kind of at a meteoric rise, don't hire me, don't pay fees, don't hire anybody else, stick it in an index fund and let it run. I think the problem is that clients really need to get a handle on the what ifs, all the possible scenarios that can happen as they go forward before retirement and into retirement.
So someone who's at home wants to dip their foot into the financial waters, either with you or with somebody else, what specific information are you looking for someone to kind of bring and put out there on the table?
So typically, first meeting information, people, you bring all your mutual fund, your 401k, your IRA statements, any pension information, any insurance information, your living expenses, what you think they're going to be in retirement if you're not already retired, all kind of that holistic information that where we would build projections. I think that's the key. You build out the client's life expectancy. They're going to live to 90. Figure out what they're going to need with Social Security, with their pension, with taxes, with inflation, for the rest of their lives.
Let's talk the economy. We hear the president tout how well the economy is doing. Some Americans are feeling that more than others. What are you seeing?
Well, clearly the economy is not even, because Connecticut has suffered and some of the coasts have suffered more than the middle of the country. But if you look at the numbers and you kind of mush everything together, over the last year-ish, the economy has really accelerated. Higher GDP growth, which is the measure we use to find out how much the economy is growing, has really kind of kicked it up a notch after 3 years of being kind of stuck in quicksand. So the economy is growing again at more than 3%, which is, in this environment, pretty good. Unemployment is at the lowest levels we've seen in over a decade. Here's a tidbit, African American unemployment at the lowest levels in the history of keeping numbers. A lot of good things going on, but trees don't grow to the sky. We're very late in the quote unquote business cycle. Eventually this economy will have to recess. We'll have to give a little back.
And that was my next question, the strength of the markets. How long do you foresee that being able to continue at this rate?
Here's what's interesting. Until very recently, the average investor, when the Dow is at 6,600 and then it's 10,000 and 15,000, 20,000, the average investor was not engaging. Only when the Dow got closer to 25, shockingly, now the average investor is literally throwing in with both hands. They can't wait to get involved. That's typically behavior you see. If this is a football game, this is the fourth quarter of the bull market. You should and usually see a rapid ascent like we saw in 1999, 2000, as we saw in '87 before the great crash. But the average person is throwing in they're going all in right now. They're ignoring their own risk tolerance, how much risk. They don't believe that stocks can really go down significantly. That in and of itself is a big concern.
The president celebrating what he's touting as a huge legislative win. A lot of folks would agree with him with this tax reform that had been passed. He says the average family may save a couple $1,000s a year. A lot of Democrats say they don't see that. Do you see that as a good move for folks right here in Connecticut? What's your assessment?
It's twofold. I'm glad they did something because the corporate tax rate was uncompetitive for around the world. I'm disappointed they didn't go far enough for individuals. Connecticut is one of the states, Illinois, Connecticut, New York, New Jersey, California, where we have a high income tax. So you add your income taxes and your property taxes, and you can only deduct $10,000 now. It hurts people, certainly in these kind of quote-unquote blue states. It's not the win it is everywhere else. But most people, especially those making under, let's say, $80,000, will see their taxes cut rather significantly.
Paul, talk to that new investor at home. It is a new year, possibly contemplating kind of getting into this whole world. What is your best piece of advice for someone?
Ignore the headlines. Don't get involved in the euphoria. I know it's really hard. You see, Bitcoin is making headlines and stocks are going up at this really meteoric pace. You have to really separate that. It's reality. Trees don't grow to the sky. If you're new to investing, tread very lightly, dip your toe in the water, because eventually, I think the second half of 2018, there will be a more significant downside. And I wouldn't want the newbie, if you will, to say, oh my gosh, look what I just lost. I'm not investing again.
All right, Paul Schatz, as always, we appreciate your insight. Happy New Year.
Thanks for having me. You too.